The next statement is statement of shareholders' equity. And what happened to shareholders' money? So again, on the left, we have the entire statement. And the general form is it starts with the oldest year presented, and it just rolls forward year by year by year for all the years presented in that financial statement, and it explains what happened to the shareholders' money. That's the idea of the statement. And we can extract a few numbers just to look at them. And some of the numbers on the right are profits earned for the year, dividends paid for the year, and repurchased shares. Those are some of the big numbers that move around inside the Intel statements. Profits are from the income statement. Dividends are the amount declared by the company to pay to its shareholders. And again, here's that ratio we see of what did you pay out and how much did you earn. And repurchase is Intel had extra money and they went to buy back stock, Intel stock from the market to lower the shares outstanding, therefore increasing the value of each share. So when we do buybacks, we see large movements of money. Here, $10 billion, right? That's a lot of stock to buy back. The example of analysis is Intel's been very profitable. They earned $10 billion in 2017 and $21 billion in 2018. They were able to pay $5 billion out in dividends for each of those 2 years, and were able to use some of the excess money to buy back stock, thereby increasing the stock value to the shareholders. If we look a little deeper at the actual statement of shareholders' equity, whoa, more lines, right? So let's go to Excel and see if we can understand a little more deeply how things work. So this is a deeper dive into the statement of shareholders' equity. It starts with the beginning of the earliest year in the statements. In this case, it starts with the beginning of 2016, which is the same as the end of 2015. So it starts with what is the end of 2015, the balance is, in common stock. Those are shares that were purchased from the company, plus this other accumulated item, which again we'll skip. And then we plus the retained earnings, which are the dividends subtracted from net income. And that is $61 billion as of December 2015. So that moves from year to year, and notice this is the next year, 2016. And it reconciles all the things that happened. What happened in terms of issuing more stock to the public or buying back stock from the current shareholders, how much profit was earned, that's net income, how much was paid out by way of cash dividends right there, and the amount that was used for repurchasing. This is for 1 year, and now we have this new balance, 2016. Guess what? Same thing happens for 2017. So how much earnings do you have by way of profit? How much dividend do you pay out? And again, their case, how much shares did they repurchase? And other information that happened rolls us forward 1 more year to 2017, right? So we get to the end of 2017. Then for the final year, we do it once again. How much profit did we make? How much dividend we pay out? How many stock did we repurchase? And those are the main things that happened during that year. And we end up with the final balance in shareholders' equity. So again, as I mentioned, shareholders' equity, the statement, shows a roll forward from the earliest date presented in the statements until the last date presented in the statement, and tells you, the shareholder, what happened to your money, right? That's one way to think about it. The next statement is a statement of cash flows. This one's so much you wouldn't even fit in one box. So here it is, where did the cash come from and go to? And it's broken into 3 activities: operating, investing, and financing. Operating is running the business, in their case, manufacturing and selling chips. And investing is investing for the future. It could be buying more plant and equipment to build capacity for the future, or they could have acquired another company, which they believe will help them in the future, or they could have invested money in securities, that they park money in securities, think of it as contingency funds or war chests, whatever words you mentioned, but those are cash assets they don't need in cash, so they invest it in probably safe bonds and stocks. And that's investing. Financing is, how did we finance the business? And these are transactions related to borrowing money and transactions related to our shareholders and either selling stock to them or buying back stock from them. And those are the 3 activities. In this particular case, we see that Intel generated a lot of money from running its business, $29 billion in 2018. What did they do with that money? Well, they invested $11 billion in the future, and they spent $18 billion by paying off loans, by paying back shareholders by way of dividends or by buying stock out of the market by way of repurchasing shares. So the total net cash doesn't look like much, only a mere 414 million. What's that among friends? But the money that flows through Intel is very substantial. 29 billion from running the business, paying 11 billion for the future, and paying 18 billion to the providers of capital to Intel. So that's high level of the cash flow statement. Just think always of three activities. Next, we'll do a deeper dive. The deeper dive for cash flows, again, we'll just look at the three major category level. The first is from operations. We always start with net income, and then we adjust it. These adjustments are sources and uses of cash for running the business. If you buy inventory, that's not a cost of goods sold yet because you haven't sold it yet, but it did cost you cash. So that's an example of using cash. If you sell new products to customers and they don't pay you, well, it's great that they bought your product. It's not so great they didn't pay you yet. So that receivable will become a use of cash because until they pay you, you're fronting them the money in a way, and you're using cash. So this whole section deals with all the elements of the balance sheet, and that may be plus or minus from any time to time, and generating or using cash. But the net of it is what's important. The net is net cash from operating activities was the same $29 billion, right? Next section is investments. The investments could be here, physical plant, like property, plant, equipment. It could be acquisitions, buying other companies, or it could be investing in securities, as I mentioned. That's this whole block in green represents different types of transactions with securities. They also may make small equity investments in other companies that might be of value to them down the road. Think of these maybe as even startups that need some money. So Intel gives them some money in exchange for some stock, and they'll watch it, hopefully that the company goes well, and Intel may buy the entire company at some point in time. And so those are some of the activities. The net of those transactions are net cash used or provided from investing activities. And here they use cash. They used $11 billion worth of cash. Final section is, as I talked about, things that relate to borrowing money. So these are repaying or borrowing more money from debt sources. Next are related to common stock, issuing shares to common shareholders, but in their case, they bought back shares from common shareholders. And for existing shareholders, they rewarded them with a cash dividend. The net of all that activity is the net cash used or provided by financing activities. And here it's a negative number, which means it's used. Again, high level, they had from the top section down to this number, they got $29 billion from running the business. They made a bunch of different types of investments during the year. Net effect, they spent $11 billion. They did things with debt, but a lot of things with equity. In Intel's case, at least for that year, net result, they paid out $18 billion from financing activities. So the net, as I mentioned, is fairly small, but we see all the detail of how they spent the money. You can imagine shareholders and analysts are very interested to see how Intel generates and uses money. And this is a very useful statement. Although a lot of people don't look at it very closely, it is a very important one.